Philippine headline inflation for May slows to 1.3%. That is the slowest it's ever been in more than 5.5 years. And that is bang in line with the business world estimate of 1.3%. And also right smack in the middle of the BSP's May inflation estimate of between 0.9 and 1.7%. Now that news announced just 30 minutes ago here at the Philippine Statistics Authority in Quezon City, where the national statistician himself, Dennis Mapa, had just announced the inflation results and is now addressing questions from media. Let's listen in for the moment.
In spite na hindi ganun yun dun sa cereals, yung bigas, kasi may mga tumaas din yung fish, yung eggs sa pagbaba ng presyo. Yung kayang P20 pesos program, nakakatulong ba yun? May nakikita niyo na ba kayong epekto para sa inflation? Although vulnerable sectors lang yung nakikinabang dito for the meantime, NS.
Thank you very much, Alan. Yes, definitely yung ating 20 peso rice no sa mga outlets, ibang mga outlets natin ay pumapasok na isa sa mga rason din yung pagbaba ng overall price ng rice. Ito ay sasabihin ko lang para makita natin yung mga numbers, yung ating tinatrack ng presyo ng bigas, ano, yung regular milled 1 kilogram, yung average price niya nitong Mayo 2025 ay nasa 43.19 pesos per kilo. Kung ikukumpara natin noong Mayo 2024, ito ay...
The cheaper price of rice is central to the inflation results. With us to make sense of it all, Dino Aquino, the Vice President and Head of Fixed Income Trading at Security Bank Trust and Asset Management, joining us live. And Victor Abola, the Senior Economist at the University of Asia and the Pacific. At the top of the hour, the Philippine Statistics Authority released data showing headline inflation eases further in May. National statistician Dennis Mapa announces the Consumer Price Index, or CPI, fell to 1.3% in May from 1.4% in April, led by the slower annual increase in housing and utilities. Now that figure settled within the Bangko Sentral ng Pilipinas' forecast range of between 0.9 to 1.7%. The May print is also matched the 1.3% median estimate from a Business World poll of analysts. This is also the lowest inflation rate since November 2019's 1.2%. Let's take a look at the markets nearly an hour after the latest inflation report has been released, and take a look at the Philippine Stock Exchange Index and see how that's trading. It's nearly unchanged, as you can see there, but the dollar-peso exchange rate moving at $55.63 pesos, closing at 55.77 in the previous session. So we're seeing a little bit of strengthening there in the first hour of the session following the inflation results. As for the Philippine Stock Exchange Index, we'll give that right to you soon as it becomes available. Let's take a look at the PSE now and see how that's doing. Looks like it is already still trading at 6,379, but the bond market is moving a little right now at 6.27%. The previous close of 6.27% barely changed from those inflation reports. Markets are closed tomorrow, June 6th, for Eid al-Adha, or the Feast of Sacrifice, regular holiday here in the Philippines. Well, with us now for more is Dino Aquino, VP and Head of Fixed Income Trading at Security Bank Trust and Asset Management, and Victor Abola, economist at the University of Asia and the Pacific. So good to have you both, gentlemen. Dino here in the studio, and Victor, a common mentor for us both, maybe in different decades. Good to see you.
Morning, Mr. Aquino.
All right, good to have you both at a very critical time when inflation figures are falling. And I know that you made a bit of a change there, Dino. Take us through that. thought process there? You nearly got it right, but you changed your mind at
yeah,
the last.
I changed my mind yesterday. I
Right.
chatted you. My original estimate was actually 1.3. Then I just made a last-minute computation yesterday. Then I realized it was June. So, so I was originally correct. But
All right.
yeah, but
So
it's
that's a
still,
technicality there.
But as mentioned, it's still the lowest since 2019.
It is, and you took of particular interest the movement in the bond market as well as the Philippine peso.
Yeah.
We've seen a bit of strengthening, but the bond market barely changed, as we saw it a couple of seconds ago.
There's a word to describe the bond market right now. It's like a groundhog day. Months since February. It's more of the global implications on the uncertainties. If you look at our fundamental economic situation, it's actually we're in solid footing. Inflation's going down, growth is decent, the peso is strong. So in reality, yields should be a lot lower than where it is right now. But because of the uncertainties with regards to the Trump administration, the taco trade. I don't know.
Right.
The taco trade.
Trump always chickens out.
Yeah,
trade.
the taco trade.
Coming from the Trump put.
Yeah, and then of course the uncertainty with regards to when will the Fed reduce policy rates, because I think in terms of decoupling, the Philippines, the tightest we actually decoupled from, the tightest spread we had from the U.S. in terms of benchmark rates was around 2022. It was around 75 basis points. So I don't think they can actually tighten further to 50, given the uncertainties. But in reality, we can actually decouple if we just look at the solid fundamentals locally.
Well, let's ask Vic, because Vic, you go a really long way back. I mean, when I was just starting as a reporter, you'd already been a mentor there. Take us through your thoughts about that word decoupling, because that's a concept that I hadn't really taken up since globalization came to be the operative word. How does it appear to you now that inflation is not a problem, but growth is? And how much of an impact really is whatever's happening in the U.S. to us that is least exposed?
I think that there's been too much focus on the United States when the fundamentals in the Philippines is actually much better, and the economy is slowing down. And I think that the central bank BSP has been too timid. My projections right now will average below 2% inflation rate for the year. So you're below your target. And why is it that you're still keeping interest rates high? That's preventing a lot of companies from borrowing, and also our real estate sector cannot recover because it's too high. I posted in our publication that I expect 50% 50 basis points cut from BSP. That is to be in June, July at the latest. And that should spur the economy as well as the bond and equities markets. I think that we're seeing very high 10-year yields in real terms. Real means nominal yield, 6.3 minus 1.3% gives you 5%. That wasn't there since, 2009.
Okay, so the word there is timid. If you were the central bank governor, Professor Vic, how would you do it on June 19th? Would you go for 50 immediately, or would you go in increments of 25?
As Mr. Aquino has pointed out, there's uncertainty, but the uncertainty does not lie in inflation. The uncertainty, because inflation is not going to be a problem. Oil prices are low. The world economy is slow. And then we'll be flooded with Chinese goods that cannot enter the United States. So where is the inflation going to come from? Nowhere. And that's why the focus is to be on growth, which we have been underperforming in the last 2 quarters. And, interest rates policy rates are so important because as I said, they are 15-year high. So what's the point? I mean,
All right, well, point taken.
uncertainty there is,
yeah.
but it's not on inflation.
Point taken on growth, but let me ask Dino, because we've been tracking The interest rate differentials, for one, so that's kind of a dependency there
Yeah.
with the Fed. But then we see that we're growing,
Slower.
comparatively slower.
And we missed the target last year.
That's true.
Yeah.
So we hadn't really seen 6% over
Yeah.
the last 2 years.
Yeah.
But then when we compare ourselves to the ASEAN, we kind of look like we're in a
We're
solid
doing
place.
better compared to our neighbors, actually. But I have to agree with my professor on the spread versus inflation, because the historical spread between the benchmark rates and the inflation rate is 150 basis points. So if Dr. Abola is looking at a below 2% inflation for the rest of the year average, 5% policy rates is really too high if you consider how low the inflation average is. So that could entail further slowdown in growth, which we can't afford for, I think, for this year. Given that it's an election year, we have to show some strength in terms of growth.
Well, hold that thought. We're going to go for a quick break and get to you both back later in the program. But you're watching Money Talks, and we're covering the Philippine inflation rate, which has come in at 1.3%. That's the slowest it's ever been in 5.5 years. And in the U.S., the Fed says economic activity declined slightly in recent weeks. We'll find out why when we return. Keep it here on One News. Yun lang, 6.2 pa rin, and then for sure pumasok na. Up by less than a tenth. Mukhang hindi nag-move ang markets. Hindi nag-move, no? Priced in. Mag-move siya talaga sa 19th. 10-year natin. Oy, tumalon tayo doon. Di ko na nabasa. Patingin naman ang ano. And Dina's checking for us. Vic, I'll just read a couple of stories and we'll pick up on growth. Maybe talk about the Eurozone as well kasi nag-decouple na siya, sabi nga ni Dino. Welcome back to Money Talks. I'm Cathy Yang. U.S. Fed policymakers offering a bleak assessment of America's economy because of the Trump administration tariffs. Uncertainties remain despite trade talks with other countries moving forward before the 90-day pause in reciprocal tariffs expires. That's according to the Fed's periodic report known as the Beige Book, a collection of insights from the Fed's 12 regional banks. Since the last report was published on April 23rd, 6 districts recorded economic declines, 3 recorded growth, and 3 remained unchanged. In contrast, all 12 districts reported growth when surveyed in January. Meanwhile, Trump redoubled calls for Fed Chair Jerome Powell to lower interest rates. This comes after the payroll processing firm ADP reported slow job creation in May, increasing by only 37,000 jobs last month. Analysts expected a rise of 110,000. Likeable but tough. That is how Trump described Chinese President Xi Jinping, exposing frictions between leaders of the world's superpowers. In a Truth social media post, Trump said he likes Chinese counterpart, but claims, quote, he is extremely hard to make a deal with. U.S.-China trade talks took a hit after both countries accused each other of violating the tariff deal that they struck in Geneva. White House officials announced Trump would likely speak with Xi this week to iron out their differences. Meanwhile, China's decision to curb exports of rare earths has upended the auto industry. Some European auto parts plants have suspended output, and Germany-based Mercedes-Benz is also looking for ways to protect itself from shortages. The European Union has also begun looking for alternatives to halt the stoppage of production lines. China produces around 90% of the world's rare earths and is using this advantage as leverage in the country's trade war with the U.S. The Philippines' growth remains stable, even as global trade tensions could make the 6 to 8% target hard to hit in the next 2 years. That is according to the Organization for Economic Cooperation and Development. OECD economist Cyril Schwellnus said the country continues to show solid growth momentum, driven by domestic demand and public investment. In its latest economic outlook, the OECD projects growth below target in 2025 and 2026. It sees the economy growing by 5.6% this year, picking up to the lower end of the target in 2026. Schwellnus cites a strong labor market and election-tied spending as main drivers of growth. He says the government's 6 to 8% target is perfectly attainable in the medium term, but hard to reach in the short term. Well, Trump's comments on Xi and his renewed call to cut rates pushed the markets to end Wednesday's session mixed. The Dow slipped by 0.2%, S&P 500 up less than 0.1%, and the Nasdaq climbed by 0.33%. U.S. 10-year Treasury yields posting their biggest one-day decline since April 14th, settling at 4.36%. And gold prices have inched down to $3,373 per troy ounce. As for U.S. futures, they're pointing to slight declines when the markets open later tonight Manila time. The Dow, S&P, and Nasdaq are all lower by less than 0.1%. Asian markets are looking mixed at the open. In the first hour of trading this Thursday, the Australian stock market up by 0.1%, Kospi climbing nearly 1.5%, and the Nikkei 225 down 0.25%. Let's take a look at our own markets. Nearly after an hour after the latest inflation report's been released, looks like we got the Philippine Stock Exchange Index there. It is barely changed at 6,379. Finished lower yesterday, Wednesday, by over 0.5%. The market breadth was positive, with advancers leading decliners there. And taking a look at the bond market, we're rejoined by Dino Aquino, the VP for Head of Fixed Income Trading at Security Bank Trust and Asset Management, and Victor Abola, economist at the University of Asia and the Pacific. Let's take a look at the bond market there. I know you pulled out your phone. The belly of the curve is very interesting because you're seeing the movements there, but we're not seeing much of the movement in the 10-year, which we thought we might see some movement.
The belly is interesting because, as you mentioned, when the BSP will reduce policy rates this June, the immediate impact would be on the short end of the belly. So the duration fear is still there, especially with the U.S. I know you've been hearing the U.S. 30-year flirting with the 5% level. So it's steepened quite a lot. It's similar to our own local bonds, where the 20-year is actually steepened to around 6.6%, and the 10-year is hovering at around 6.3%. And again, given that our inflation is 1.3%, that's a very, very huge gap in terms of carry. So I think that's a very attractive level if you ask me, at 6.3 versus a inflation average that's at below 2%. That's very attractive for me.
And it also validates the decoupling story. And when you look at a wider spread there, and Vic, we've been talking about the European markets and how they've really decoupled with 9 rate cuts there. Even Trump saying the Fed's got to do the same. But then again,
he tweeted yesterday.
But it only shows that if Europe's decoupled, then Asia could as well.
They could,
or
if they want to.
And is the Philippines in a good position to do that?
Yes, I think so. I believe so. We're in a good position, given our inflation outlook. And of course, Dr. Abola mentioned that our growth needs to be stronger. I think in terms of growth, we're doing better than our neighbors. But if our goal is to achieve a credit upgrade, then our growth has to be really, really strong for that to be achieved.
Right. Vic, I'd want to ask you then. I mean, you did cite some uncertainty there. I mean, you know, the imports coming from China and that flood of imports, quite a concern. What can the government do right now, proactively? As we know, we can decouple, and we're going to get some help from the BSP, although you wanted them to be a little bit less timid. What can the government do in this case to make
Well,
sure that they achieve at least the bottom end of their forecast of 6% growth?
the first thing they could do is really to cut aggressively policy rates by 50 basis points, and that should help a lot of the investors, particularly in the real estate. And then they should rebuild the dollar reserve, because all of the increases in our dollars in the past 3 years have been based on borrowings. That's not a sustainable strategy. We have to buy dollars, because OF you have a weaker peso, the OFW spending has a multiplier effect of 2.5. So it's not like in other countries where a depreciation of the currency is, produces contraction in the economy. It's not in the Philippines. It is actually expansionary, and that is what we need. There was no point in really letting the peso appreciate so much, in the past 4 months.
Are you concerned, though? Because it's already appreciated 2.9%, so that's 2.9% less of a remittance for
Yes.
the overseas foreign worker abroad, remitting money home.
Yep.
So what is the sweet spot then for the peso, if not at the 55 to the dollar level?
I think we had already reached 58 now, and that was okay at the time, why do you build reserve by borrowing when you can buy it from the market and keep it there at more or less 58, and so you benefit the economy in that way, because from around 70% of the economy really depend on the currency movements.
All right. Just as a final point, Dino, as we do have to wrap up, how do we then trade? The belly of the curve is showing a lot of risk aversion there and a lot of safety, flight to safety.
Yeah.
What would you advise investors?
For me, I think it's an opportune time to add duration, especially on the 10 years and above, given how steep the curve is. The belly has had a good run. And I think moving forward, especially in the second half of the year, we might see the long end outperform the belly, because in the first half, the belly outperformed the long end. So I think it's an opportunistic time to add some duration at this point.
Got that. Well, thank you so much for joining us. Really
Thank you
appreciate
again.
it.
Thank
And
you
to have our
again.
mentor online.
Hi,
Thank
sir.
you so much, Professor Vic Abola. Appreciate your time and
Thank
expertise.
you, Cathy. Be glad to be here.
Coming right up, Meralco Power Gen Corp, or MGen, partners with a Saudi firm to explore solar power projects. Keep it here on One News. You're watching Money Talks in One News. The Bangko Sentral ng Pilipinas seeking to amend its regulatory relief policy to better support banks during calamities and disasters. The draft circular proposes to adopt relief measures already given to banks hit by recent calamities. Under the draft rules, banks in affected areas may get a 6-month grace period for loan payments and exclude certain loans from being marked as part due or non-performing for up to a year. Lastly, banks can spread out losses from damaged assets over 3 years subject to approval. Meralco Power Gen Corp, or MGen, has partnered with Saudi-based energy developer ACWA Power to explore solar power projects in the Philippines and Southeast Asia. The deal was inked on the sidelines of the ASEAN Summit in Kuala Lumpur, Malaysia. Under the agreement, Aqua Power and MGen will jointly develop renewable energy products, particularly solar. Aqua Power is a global developer in renewables and green hydrogen with nearly 79% gigawatts in its 2025 portfolio. It also runs the world's largest private water desalination company. Meanwhile, MGen has over 4,900 megawatts in net sellable capacity from both conventional and renewable sources as of March. Headlines around the globe. U.S. President Donald Trump has resurrected his travel ban in several countries, citing security risks. The president first declared the travel ban a week into his first term in 2017. The ban this time covers 12 countries and will take effect starting Monday. Countries whose nationals will be fully restricted from entry are Afghanistan, Myanmar, Chad, Republic of Congo, Equatorial Guinea, Eritrea, Haiti, Iran, Libya, Somalia, Sudan, and Yemen. Those from these 7 countries have partial restrictions: Burundi, Cuba, Laos, Sierra Leone, Togo, Turkmenistan, and Venezuela. A White House official said the anti-Semitic attack on Boulder, Colorado was Trump's final straw that pushed him to sign the proclamation, according to a CNN report. Meantime, a draft UN Security Council resolution demanding a permanent ceasefire between Israel and Hamas has been vetoed by the U.S. All other 14 council members voted in favor of the draft as a humanitarian crisis unfolds in the enclave of more than 2 million people. Since the U.S. is one of the 5 permanent members, its veto means the resolution can't move forward. Few aid has entered Gaza since Israel lifted an 11-week blockade last month. The U.S. said it would not support a resolution that fails to condemn Hamas and does not call for the group's departure in the enclave. Israel condemned the body for appeasing Hamas, while the terrorist group criticized the U.S. for showing a blind bias to Tel Aviv. And in the U.S., an appeals court rejected Apple's request to pause key parts of a federal judge's order requiring iPhone maker to open its App Store to more competition. The 9th U.S. Circuit Court of Appeals thumbed down Apple's petition to put the provisions on hold as the tech company appeals the judge's order. Apple's legal debacle stems from a long-running antitrust lawsuit brought by Epic Games, the maker of the online game Fortnite. A judge found Apple in contempt of an earlier injunction order after discovering a 27% fee that the iPhone maker imposed on app developers when its customers complete an app purchased outside the App Store. And before we go, South Korea is hosting World Environment Day today, June 5th, with the theme Beat Plastic Pollution. Oh, that's a lot of plastic there. The UN Environment Program says the event will spotlight solutions to end global plastic pollution. It's one of today's most urgent environmental challenges. First marked in 1972, World Environment Day is the UN's principal platform for raising awareness on environmental issues. So this marks the second time the Republic of Korea is hosting, pushing action through a life cycle strategy involving governments, businesses, and consumers. Well, the use of this cup is beating plastic, so that's one contribution to Earth Day today. That's it for Money Talks. I am Cathy Yang. Catch us again tomorrow, 9:30 a.m. here on One News. We're also streamed live on YouTube and on our Facebook channels. Have a great day ahead.